Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about Dixon Technology, a complete picture of the company with all analysis about segment-wise distribution of sales, etc. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position from any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Dixon Tech, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can get $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. Established in 1993, Dixon Tech is a leading electronic contract manufacturing firm, and they also manufacture consumer durable products and boast of best clients in the business. The market cap of the company is around 26,000 crores and it has come down from the top. Their clientele includes CB Plus, Xiaomi TV, Samsung phones, all kind of washing machines, Jio set-top boxes, and now their client have also added Google TV, Google as their client, and Bharti as well. Financials, if you look at the financials, these are Q1 numbers, very good sales numbers, 54% growth in sales. A profit jumped threefolds to around 46 crores, 2.5 times higher. A return on equity of 22%. Margins have dipped to 4%, and that was the concern, and that is why the stock did not go up a lot and went to even 3,200 from 6,000, but is now recovering. But overall, in the sales front, they are doing extremely well. So what happens is, even if the margins are a little bit less, if the sales are doubling, the overall profitability do increase a lot year on year. So if you look at the revenue picture over the last 3 years, FY19 to FY22, we have seen a threefold jump from around 3,000 crores in FY19. We are at 10,800 crores by FY22, and we are looking at something in the region of 13 to 14,000 crore sales, around 14,000 crores of sales this year. So it's going to be even bigger as we go along, as we move along in this, you can say, the festive season. In terms of profitability, 63 crores of profit in FY19 has now become 190 crores. Again, profits have also jumped threefold, and that is why the stock has gone up appreciably from around 600 rupees. The stock went all the way to 6,000 over 2.5 years, and has corrected from those levels, so 10x, and then have corrected from there, and currently around 4,000 4,200 levels, 4,400 or so, but it dipped to 32 3,300 at one point of time. In terms of margins, 5% operating profit margin was there in FY19. We thought that it could increase to 6 to 8%, but eventually it has decreased, basically owing to a lot of, you can say, raw material cost that has gone up, and a lot of other factors. Operationally, the company did not do that well, and so the margins have dipped by 100 basis points to around 4%. So this is the segment-wise sales distribution, and we'll spend some time over this slide because this is extremely important to understand as to how they sell their products and what is their basic income coming from. LED televisions is big, so Samsung, Xiaomi, etc. Most of the leading LED players are in here, and they have a 48% sales coming from LED TVs. Second in this list is at 26%, which is lighting, and lighting is giving them the best of the margins. So in terms of margins, lighting is doing extremely well, and that has 26% of the business coming in from there. And they are expanding their capacity, and we'll discuss about capacities in a while, but they are expanding capacities big time for televisions and lighting. So we are going to see probably very good, very decent growth on the sales front in these two segments. Mobile phones is also up there with 12%, and they are now focusing on, you can say, they are now focusing on building $200 or sub 200 $250 phones to export globally, and they are expanding capacity there as well. 5% of their business is into security system, so that's on there, and 9% is from home appliances. They do provide washing machines, etc., that comes under home appliances, and they are having more clients in there as well. So overall the company is doing extremely well. The sales segment wise breakup, as you see, looks pretty evened out, even though there are two segments that has around 75% of the sales coming from LED TV and lighting, but there are other segments. So we have at least 1% of the sales that could come from set-top boxes and whatever they have tied up with Bharti as well. So Bharti and Jio are their clients now, so 1 to 2% will come from there. So they are trying to diversify into a lot of segments in order to build their positions in a lot of industries, so that they become some kind of a giant in this sector of providing products for OEMs. And so export is the big thing that they are looking at even going forward. So a 25,000 crore market cap company, this could be even bigger from here, just based on the fact that they have a lion's share of the market doing this sort of a business. In terms of production capacity, so what they have done is they have increased production capacity in all segments, and you look at lighting, they have 240 million units per year, you can say, production capacity in lighting. In mobile phones, it's around 40 million now. They've increased it by 65%. Security systems is around 7.5 million. For LED TV, for LED lighting, this is not televisions but LEDs, etc. And for lighting, I think they have increased it to 140. For LEDs, they have increased to 4.4 million LED TVs, and home appliances is 1.2 million. Basically, they have increased their capacity all throughout between 35 to 40% over the last year, over FY21, and they are going to do that even further. The increase in capacity will just continue, so expansion will continue. So it looks like the business is getting they are getting the orders, and business is going to do even better as things normalize and open up completely. And hopefully this festive season will bring in even more, you can say, revenues and profitability on the bottom line for the company, because this will be the first clean, you can say, festive season for all these consumer companies. So it will be interesting to see how the December numbers and the March numbers pan out. So this has a huge moat. So basically it has strong clients in many domains, and large clients are their basis. So even if there are other companies which are into making all these kinds of products for OEMs, Dixon has the biggest market share, and they are just gaining market share in the same industry. And the stock price movement also shows as to how the profitability and the sales growth has taken place over the last 3-4 years. So strong clients in many domains, heavy institutional and HNI investment. Large investors are invested in the stock, and they are invested big time. The anchor investor is in there still, even from the inception at 400-500 rupees. And consumer durable and electronic business is in early stages. This is in a nascent stage, and there is strong demand for the same business. So basically this presentation alludes to the fact that this company, although it might look expensive at 110 times earnings at the moment, but if you look 4 year 5 year down the line, this could be huge as a company. Yes, over the next 6 months we could see some gyration. We could see the stock go to 4700, come back to 4000, 3800 because of results, but things could look very good from a 4-5 year perspective. So, taking things forward, as we understand about the moat of the company, electrification to catapult the business going forward, I think overall electrification of the country, this will only help companies like Dixon to increase its, you can say, reach towards very semi-urban, you can say villages, etc. All those places which are now devoid of, you can say, electricity, or very very few hours of electricity reaches them. Once the total electrification takes place over the next 5 to 10 years, the company eventually will end up doing extremely well, because these kind of products will reach to every nooks and corners of the country. Still trading at under two times earnings. Currently, we expect that it should come out with around 14,000 crores of earning, 14 to 15,000 crores of sales for FY23. I believe it is still trading at very interesting levels at around 26 27,000 crore market cap, can easily trade at 3 to 4 times sales, and it's a big play on higher middle class consumption. As middle class increases their wealth, and they have more money to spend, more disposable income on their hands, I think products like washing machines, LED televisions, set-top boxes, and everything else, lighting, etc., will sell big time. So this is a business that is going to only grow going forward as India grows, and very big India consumption play this can be over the next 5 to 7 years, if somebody can buy and hold on to the stock. So why I believe it is a buy even after the surge of around 10-11x over the last 3 4 years. So basically, prospects of gaining large clients in the mobile and TV space is big. They are into it big time, but now they have tied with Google TV platform, and whatever television brands that they are not serving, probably they'll end up serving over the next 2 years, 3 years or so. Again, set top business is something that is now going to pick up. 1,000 crore of business is coming from there, and in FY23 would be the first year, full year, in which set top business only from Jio would come in, and they have tied up with Bharti to make other digital devices, and I think set top boxes would be part of it. So now they have the best two clients in this business, Jio and Bharti, and probably going forward, this will only increase the revenue base from this business itself. Expanding capacities in mobile and TV space by more than 60%, as I explained, is also a big thing. They are only doing that because they believe that the demand will be such that the capacity needs to be increased at such level. Entering into diagnostic kits business, it is a high margin business. Once they enter into it and have some sort of a market share, say 2 3 year down the line, they'll have a 2 3% revenue coming from here as well. So they are only increasing the pie and expanding their base in terms of increasing revenue, because they understand that overall margin picture could remain between 4 to 6% because of the kind of competition they have from other, you can say, organized players as well as unorganized sector. But what they are trying to do is they are going to make the top line even bigger, and so the bottom line in terms of profitability will be more, even though the margins will remain stable between 4 to 5% or so. Again, PLI scheme will be a direct beneficiary. Dixon would be from it. They have got at least a couple of, you can say, PLI scheme orders from here, or licenses. So that would help also going forward. And if any other PLI scheme comes in into any other domain, that would also help the business altogether. It has tied up with Google to make LED TVs on Android and Google TV platforms, and has a tie-up with Bharti to make digital devices for them. So this is something that they have probably notched up over the last 2 quarters or so, and I think going forward they'll have better deals or more deals and bigger deals that would come through, because they are into a business that is expanding big time and growing big time in India as an emerging country. Some more points as to why I believe this can be even bigger from here is that it is looking to substantially increase export of less than $200 phones going forward. As I explained, that around 15,000 rupee phones, they are looking to export it into Middle East or Southeast Asia, etc. Apart from say the Americas, and they are looking to expand that. Ramp up in export of LED lights and gaining more clients in the same space is also a big thing as to why I believe the stock could continue to perform over the next 4 or 5 years. And LED lighting business has been the best performing business over the last couple of years for them in terms of margins and in terms of profitability. After expansion, looking to serve 35% of all TV requirements of India, this is huge. So once this expansion comes into play completely by 2023, they are going to serve 35%. So every third TV, every third television would be made by Dixon Technology. So you'll understand as to how the what is the potential of the business in terms of revenues and profitability. I think festive season to see pent up demand and strong numbers. As I mentioned on time and again, this time around in 2022, it will be after 3 years hiatus that these kind of consumer companies will end up doing heavy sales in this festive season. Largest player in making feature phones in this space, and they have many clients in here, and valuations are attractive as sales may surge to nearly 16,000 crores, as I said, by FY24. I believe it will be even more, maybe 17-18,000 crore going forward by FY24. So on that term, at around 26,000 crore, market cap looks very attractive, and if they can maintain the margins, I think the numbers should be good on the bottom line and the stock should continue to perform. Yes, there could be some corrections here and there, but the stock could continue to perform and may even be a 40,000 crore market cap company in 18 months or so. In terms of technicals, relatively under-owned stock, especially by retail investors. Large investors do hold the stock. The short-term support is around 4,000. I think any dips towards 4,200 is a buying opportunity. Long-term support is around 3,500. I don't see 3,500 going to be broken so easily. So any corrections to 4,200, 4,100 is a big buying opportunity. It's a slightly longer-term trade. It's not a short-term trade like a 3 to 4 months. It's a 18-month investment that you can do between 18 to 24 months and make big money out of it, 50 to 60% or so. So in my opinion, buy on current market price on any declines. I think current market price is fine to buy 10-20% of your total holding, but around 41, 4200 if you get it, those will be very good levels to get into the stock. Have a 3 to 5 year view, it will do extremely well. Even from a 2 to 3 year perspective, the stock should end up doing very well. I think the numbers should pick up big time from December onwards. You can hold even longer. It's becoming a giant in the space. I believe this could be huge from a 5 to 8 year perspective and should give consistent returns going forward. So this was a video on Dixon Technology. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly subscribe to my Patreon networks. Thanks a lot for watching.